Tomorrow is the tax filing deadline for those who requested extensions despite the government shutdown. And last week, the IRS also announced new tax brackets for next year. Joining us now to break all this down, what the changes can mean for you, financial expert Nathan Fort from Vital Retirement Planners. Always good to see you, Nathan.
Good to be here again.
All right, Nathan, what happens if people miss tomorrow's deadline?
Well, a lot of people are filing extensions, and the main reason for extensions for Texans, at least Travis and Williamson County, is because of the disasters, the floods. So a lot of people were displaced, and because of that, it's a little more difficult to get all the documentation in order. So they're given an extension all the way to February 2nd, 2026. Now, this is for the 2024 tax return.
Okay.
So they're able to extend even further to February 2nd, 2026.
And then they have a couple of more months before the 2025 tax.
Yeah, so you may not want to wait all the way to February. You're going to be kind of back to back with another tax season. Other people will extend for other reasons, just delays. They just need more time to pull everything together. But what you got to be careful about is you can't delay, without penalty, you can't delay the money you owe the IRS.
Right.
So you can file extensions.
You still have to pay.
Yes, and there is a 7% penalty.
Oh.
It's a monthly penalty, but that 7% is not compounded monthly.
Okay.
It's an annualized 7%. But if you have an idea for what you owe, just go ahead and pay that, and then you could extend the actual return file.
So if you don't file an extension or don't qualify, then you face penalties if you don't pay by tomorrow.
Right. You still have to pay.
You've already filed an extension from April.
Yes, they haven't canceled taxes.
Yeah. Oh, dang it. I was hoping to have breaking
There's an idea
news
for you, IRS, right there. Just cancel it. Simple. Simplify it.
All right, Nathan, walk us through what the income brackets means for our wallets.
Yeah, some big changes. So because of the One Big Beautiful Bill Act, that's fun to say, mouthful. There was a very large, a fairly large increase in the standard deduction in 2025. For joint filers, it was an increase of about $1,500.
Nice.
For single filers, about $750. Now for 2026, there's another $700 increase for joint filers, $350 increase for single filers. The tax brackets are still intact. The highest marginal tax rate is still 37%. But for single filers, you're going to need about more than $640,000 of income to get into that highest bracket.
Oh, is that it?
So make that a goal for yourself. Get into that bracket.
Yes, please.
Then for joint filers, it's closer to $768,000 to get into that highest marginal tax bracket.
So which income brackets are most affected?
Well, most Americans are going to find themselves in the 22 and 24% brackets, and that's typically where you find some of the biggest changes. But now is a great time to assess your tax strategy before this tax year ends. So we call this tax season in my industry. This is when you're
right now. Right
now, you're planning because the door is going to close. The opportunities are going to close for the things that you can do to affect 2025. Other than, of course, late IRA contributions and things like that.
Yeah, you got a couple more months. All right, yeah. Nathan Fort, you have any questions, contact him. We appreciate you coming here and educating us, as
thank
always.
You. I love being here.
Yeah, we love having you here. All right.